Hey guys, Daryl here. Just did a blog post. I was going through a couple of reviews of projects that are either winding up or just kicking off right now, both portfolio and client projects. And I wanted to cover off just basically a couple trends here that are happening because what's happening is one concern that I'm seeing right now is people are raising funding, whether it's from VC or ICOs, and they're doing strange things. They're ending up with, especially in the ICO world, there's a bit of madness there. They ended up with no delivery. You know, projects utterly collapse and just disappear and everything's gone. Or they're receiving, good VC money and they kind of lose control of things. And I went through and basically done a bunch of interventions on this and tried to look at the patterns that were happening. What is it that people are screwing up? What is it they could think about a little bit differently? So I just want to go through those real quickly. I'll hook up a blog post, real short one, down in the notes below. But here's the top level ones. One is funding itself. Did a company or group project raise too much or too little? If you raise too little, I actually think you're in better shape than if you raise too much. Because you can continue raising and it makes you lean and mean. It makes you focus on what really matters. When you raise too much money, there's a tendency to let costs get out of control, such that when and if sales don't materialize, if the project gets delayed, you end up in deep, deep trouble. But it also changes your mindset. It changes the mindset to one of, you can pay your way out as opposed to doing the right thing, doing the right engineering, doing the right buildup of the market, the right sales and marketing approach. So that kind of a failure of funding of too much, too little, it starts off down an interesting path. That said, I've seen groups that receive a ton of money, stay lean and mean, and focus on the mission. It really comes down to how do you do that, and that's one of the reasons I get brought in and parachuted in to help either fix, which is the harder problem, to fix the problem itself, or to make sure that the overall organization is running really well. Another area is culture. One lesson that I've learned is you need to nurture or cull the culture building. You nurture those, and you cull out, you kill off the culture breaking things when they're little. I learned from a couple COOs, a couple partners of mine that I thought they were just being pain in the ass. They were just going through and being pedantic about little things while we were trying to build things. And I realized years later that one of the major reasons we were successful was the culture that we had built. And it stemmed from doing the little things right and stopping the little things when they were wrong so that they didn't get out of control. One of the hardest things to change is culture. So you have to nurture it and guide it and make sure that it's going in the right direction. That culture for your team, as Drucker says, culture eats strategy for breakfast every day. Another point on this is what Gary Vee would call an A-player approach. And this really comes down to being aware, one, of yourself. Where are you really an A player? Where are you a B player, which means you're just sort of good at it? And where are you a C player, which means you kind of suck? What's funny is often we trick ourselves that we think we're an A player on something we're actually a B player on. So it's something you need to look at for yourself. You also need to look at for your people. And they may be A players in many different domains, but are they doing that job? Are they using their A player skills to do what they're doing? Because if they're not, then they're really just a B player. You might be able to repurpose them and re-aim them. And what you'll find, I find it's at least a doubling of productivity when you have someone who's really doing their A player job. It's just immensely, one, rewarding. They get more done. They're more effective. They're more energized. It just adds up overall, and for the company, it's a huge benefit. So make sure you look at that A player approach. Another area where companies struggle is on scope and projects. Scope can be too big, too little. You're trying to bite off more than you can chew, for example, or you're not going hard enough. You're not using your funds wisely. You're not actually challenging the team. You're just kind of moping along and doing 40-hour weeks every week. I mean, that's good. I do believe there are intensive periods and stuff, but if you don't have a high sort of a big hairy ass goal, what are you doing? The other side of that is the ones where we bite off too much and we may not know we've bitten off too much, especially in the blockchain and self-sovereign identity, the decentralized identity space. There are a lot of unknowns. There are a lot of places where you dig into a problem and you realize you've just found another 20 problems and they're all hard. and they may even feel harder than the original problem you're trying to solve. So sometimes you dive in and the scope was really, you thought you knew it, but the learning that happened meant you discovered, no, this game is a different game utterly, and you got to figure that out. So manage that scope. Another area where we see a lot of trouble is what I would call ghosts from the past. All too often we think what we've got already in hand, whether it's a prototype. I learned quickly once I started building high performance teams that I am not a production software guy. I am a prototyper, and I have to be okay with me throwing together a prototype and the real hardcore production software team going in and just burning it to the ground, throwing it out, disposing of it, and basically looking at my code and snickering. I'm the ideas guy. I'm the prove the concept, de-risk the thing, and then fine, if they need to burn it, I'm totally cool with that. So if I leave, though, a bunch of technical debt behind, or if we have acquired a company and there's a bunch of technical debt and we're not maturely looking at it and saying, we need to fix this because the cost of technical debt just gets more and more expensive as time goes on, as the teams grow, as the projects grow. What was an annoyance can become a crippling problem. Now there are two more things that I think these are more patterns that projects and companies are failing on when they do go down in flames, or they're really good at when things are going well. One of those is saying no. You need to learn to respect and enable the ability to say no for your team by putting in approaches that, what's your mission? If things aren't on the mission, what are you doing it for? Let your team say no, and you'll find that the ability to say no is incredibly powerful. Another one sort of related is decisions. I think the real velocity of decisions really impacts the overall story of your project or your company. There will never be enough information. In some of the domains we're operating in blockchain, self-sovereign identity, the decentralized identity world, there are a lot of unknowns, and there always will. But we have to be comfortable with knowing that we know enough to proceed, and even when we don't, we will proceed because we'll learn really quickly, we'll adjust, back up, and attack it again in a different way with what we've learned. So those decisions. So just quick from the top, we talked about funding, we talked about culture, talked about having an A-player approach, being in the right place, talked about scope, too much, too little, make sure you actually really understand your scope. The ghosts from the past and that technical debt, and make sure you're building on something that's solid for your future. We talked about saying no, and we talked about making decisions. Those should help you out. Have an awesome day.